Hey everybody, DayTraderRockStar here.
Tradeometer YM overbought.
And what you heard right there is the Tradeometer. And that's exactly what we're going to be talking about today. And we're going to be talking about trading the futures and using three of our best tools to trade the futures. One you heard right there is called the Tradeometer. The other one is the Rockbot. And we've put out a new script today, which is called the Quad Rotation. Now I'm going to go over my trades today. Again, just to update you, I'm DayTraderRockStar. I broadcast live each and every day. We start off early in the morning, around 7:45 in the morning. That's Eastern Standard Time, and we trade all the way through to the end of the day. I discuss the markets like I'm discussing watching the football game. I do play-by-play of the markets. I point out all the best areas, and we have many tools available to our members and users that could also identify these setups for you. So there's so much value here at Day Trading Radio. Welcome you to come by. DayTradingRadio.com. Check it out. There's also a nice little free trial you could try out at dtr.tv/free. No credit card or anything. Just fill out a username, password, and jump in the room for 10 days and get to see all these things run, especially if you're a futures trader. Even though we do trade a lot of stocks, options, pre-market stocks, the futures here is what I specialize in, and short-term trading. So let's get into it. Today was an interesting day, even though this is the after hours. Right now we're up 15. I came in this week knowing that the overhang of the banking situation overhanging the markets, the overall malaise in the markets, just giving us this choppy market for the whole year and the last almost 2 years here. It's just a lot of things just going sideways. But that's pretty good as long as you trade and understand your conditions and how you want to trade those conditions. There's two types of really conditions that we're trading: a very choppy market or a trending market. And if you can identify either one of them, you're going to have an edge. All right, and I talk about the edges, and I trade these edges live with you.
Tradeometer NQ oversold.
Now you can hear that's going on, and just to let you know, that Tradeometer goes 24/7. So it is going on right now because the futures are open. I'll show it to you in a second what alerts are being made there. And what you're looking here is today's trades. And I just wanted to go over a few different things. The concept of trading the futures is very important. I try to stress that, trying to make analogies about it, especially if you are good at something. What makes you great at that? And that's understanding how to be great. I mean, I'm not going to just throw stuff out there, but simple things that a lot of people are familiar with, that we could relate trading to. A lot of it is gambling, and the simple concept of betting when you have a good hand. All right, that's a very simple concept to remember. And if you look at poker players or look at blackjack or any type of game of kind of a chance, but there is also a kind of an edge for people who have better hands than others, and how to get to those hands. That's what you want to do. You want to wait for your hand, and then you want to be betting. And that's the only chance that you have of actually being successful at some of these things. Same thing for an example is sports, a baseball. You ever hear the concept of waiting for your pitch? Someone could hit a low outside fastball really good, or someone could hit up a high and away fastball. You have your specialty pitch that you're looking for, and that's when you want to unload and take that bat off your shoulder. Well, the same thing with trading. With trading, we're looking for that pitch, and that pitch is defined by our criteria, the HBS methodology, which I teach. And there's about 3 or 4 good setups that we teach, and we take these trades each day. I just show you them. And I'm doing this as I'm juggling the chat rooms and going over the markets and news and stuff. So I might get in and out, but I'm actually just proving the concept and taking these trades. All right, I'm not making tremendous trades. Again, I'm not also focused on these 100%. I'll identify them, we'll take the trade, and I'll show you where to take off, and then we'll go back and look back at what we did wrong or what we did right. All right, so a lot of these, again, starting today, first trade taken 8:30. I got in a little later today. Got right in. We had a nice little pullback here, and we kind of had a little divergence. See that higher low right here? So notice that divergence between this low and this lower low, this low and this lower low, and this low and this higher low. And at that point, seeing it and saying, all right, I'm just sitting down. We started to see the rotation on the 60 period coming to 8:45, which is pre-market. We take that, and I believe a lot of our setups are going to mark these off. So as I take these setups, I'm also referring to two of our tools that we use. One is called the Rockbot, and one is called the Tradeometer. The first thing I'll show you is the Tradeometer. All right, the Tradeometer. This is what the Tradeometer looks like, and it's I call it an order entry indicator. Now we just heard we got some sell signals on the YM just before, and we just had a buy signal in the NQ. So like I said, these things are constantly active right now, and sometimes you'll see, crossing indices here. The Dow might be doing something, the Nasdaq might be doing something opposite, and you'll see these things really react. So today, let's go back to that chart again. We took our first trade right around that 845 area, 845. So let's see what we're looking at. I know what I was looking at. I was looking at that divergence. Sometimes you'll see this chart when I'm doing my charting on the screen here. You'll see you'll see this chart a lot. And let's go out here, and I'll make these annotations on the chart, usually like a flag or channel lines, divergence lines. So let's go back here. This was about 845, and this was that candlestick right here. You can see that steep candle. That's what I noticed. And when you have a steep candle like that, you just put that stop on there, and we had this nice little drift back up, and that's exactly what we're doing. Remember, all these rules apply. I don't want to make it too complicated, but I'm also here if you have an issue with it being too complicated. Slow me down, send a message, and I don't mind sending you an email just to kind of answer your question. But the concept of the divergence and having that low, we always want to have a confirmed automatic stop, which goes into the trade right away. When we take the trade, we take that divergence low and we put a stop right at that candle. But the other part of it is understanding your time frame and what you want to gain out of it. So we're paying attention to our stochastics here. Now, a couple rules of divergences. If we have a divergence and we have a channel, we know we're going to break out of the channel 9 times out of 10. Well, also, we want to watch what are called our 60-10 stochastic, represents our 5-minute chart, or you can look at your 5-minute chart and see the direction of that and how that's working. All these help you make your final decision on how long you want to be in your trade. But like I said, the key is understanding your time frame, and then taking that time frame and applying the rules of how to exit is just as important as how to enter. We know our entry is very easy. The hard part, I always say, is that the exit, because we get greedy. We get, it's just a much more difficult thing, because everyone's always expecting you catch the bottom and this is the big move and stuff. But the majority of the time, it's not. Especially if the market's been choppy and it hasn't been doing much. You take what the market gives you, and it gives you exits, and you take that. And I don't take if you're taking 1 point or 5 points or 15 points. Depending on your time frame. In this case, we'll talk about the shortest time frame we use is the 1 minute time frame. So if I'm buying on a 1 minute diversion, I'm taking that entry, but I'm also taking it off on the first little pop. All right. In this case, you have the 60-10, and the only reason you would hold this is if the 60-10 was grinding up, or maybe you had a quad rotation, which is another indicator, which we did have here. So I do believe this was a quad rotation and a divergence. And a quad rotation divergence is a super signal, and that's something you want to hold on to a little bit longer. And again, this is pre-market. We're not getting, we know that news is going to hit, the market's going to open up, it's going to get wacky and stuff. This is just a pre-market trade. That's basically what it is. But it was based off that, and again, I held it up to the 50. I got out of it, and then market came back down here at 8:30, 9:30. We came down, and I was watching that for that rotation. And the biggest mistake I make as a trader, and this is, I think this is very valuable, because if I could share my mistakes with you, maybe it'll prevent you from making the same mistakes, or you could relate to my mistakes and it makes you feel a little bit better. Lots of times I'll see, I'll want to chase the market. If I do have a bias in the market, and I don't want to get left behind, I'll get, I'll end up chasing something or take an entry while the 9-3 stochastics are near the overbought level. And that is totally wrong, because as you can see, when the majority of the time these things move up and they move down, just like the market moves up and moves down. Betting against it is betting against the overall conditions of the market. And the only way I would do that is if I had a super signal or I had positive trend on the 60-10. That said, I think I call these the $20 trades. Depending on what you're holding, it's like walking down the street. If you have the right criteria and you keep on getting these trades and they're giving you $20, you might as well pick them up all day. And by the end of the day, you have a couple $100. But you have to take the same step. You can't be chasing. You have to be a set of rules. Don't buy on an overbought stochastic. Don't short on an oversold stochastic. Don't go short. Go short when your stochastics are overbought and you're starting to rotate back down. You have all this momentum. Go long when you're oversold. All right? And again, look at this. We took that right up here. And in a case, always do multiple contracts. Sometimes I'm in and out. So far, I just want to say, all right, this is a good setup here. I'm going to take a contract and I'm going to take it off and show you. And that helps me. It's very easy to do it on the light contracts versus bigger contract size. I agree, But the fact is, it's important to do it and prove that it works and see that it works and explain it as it's happening. All right, so these are the trades, and all these trades at this point are based off of the criteria that we use. Now, again, the tools that I'm using in this case is the Tradeometer, which we'll go back over here. Now this is all the way back, so it's going to be hard for me to zoom in here and kind of like this could go back days and stuff. Oh, let me see. That's the end of the day. Actually, the market's up 15 right now. I don't see this here. I'm gonna have to restart that here. There you go. You just have to zoom out, and you'll see these. And again, if you zoom out, you might say, "Well, that's not." It's harder to say. You really got to zoom in here. This is actually condensed for the video's sake. But if you could actually increase the size. There's a lot of things you could do with the Tradeometer here. Say you're not interested in trading the YM, you could X that out, and then the other two will get bigger. If you're just trading the NASDAQ or the ES, let's just show you the ES, and then you have a much better way of actually reading into these, and then you could zoom these in, and just kind of focus on this, or zoom out, and you'll get a much better And again, this is kind of a scalping tool. So you can see it usually identifies these pivots before it starts heading back up. A pivot heads back up, a pivot heads back up, a pivot heads back up, a pivot heads up, a pivot heads down, pivot heads up, and not really pretty much going sideways. It's not an aggressive move higher, but it is. If you were going to say, all right, in this move, where would you want to go long, or at least where would you? You would have to say here. I mean, you wouldn't say here. You wouldn't say here. You want to be right at these pivot areas, and that's what this is identifying this for you. And it's actually happening with the same concept that the quad rotation is. And we're waiting for multiple time frames to set up. And this is the sell signal. It doesn't mean going to buy to sell and then sell to buy. This is just showing you the quad rotation is set up as a buy signal. How far do you want to take that? Well, you're going to break that down by using your other indicators that we teach, what I teach. And the same thing on the short signal. And when it's not that we're going to take it off here. We're probably going to take it off on the indicators. So let's go back as that identifies those for you. And we also have a cluster effect here too, which is kind of a nice little thing. Which it's if I zoom in here a little bit more, adjust this thing, you'll get a little bit more information from the cluster trades, especially when I close them up and put them all on here. Let's see if I can bring this other one up here. Yeah, there we go. So, and if I bring this one back up, and then if I zoom some of these in, you'll see it. I don't recommend using the cluster unless you're looking at just a kind of a big bird's eye view of the market here, and you can start to see a couple of these come together, a couple of these come together, a couple of these, and that's my confirmation. When you have 2 or more clusters, then you're going to probably get a move in the direction. But this kind of cleans it up a bit, and then you have that. But that is a fantastic tool. Everyone uses it. It's probably the most popular tool on the site at Day Trading Radio. It comes with your memberships. All right, it comes with the membership, and again, lifetime membership gets you this for lifetime. And it's always being updated. If you look on the other side of it, you have the crude, gold, and Russell, and we're planning on adding some new stuff to it. I'd like to add Bitcoin to it, and we're working on that in the reader. So again, we go on to the rest of the trades. Another trade here. And this was kind of relative divergence. A nice little pop. And what I've been doing is making sure I have that divergence on my side or I have the stochastics on my side. I made that a point because the other day I made a couple mistakes, and I said, look, I didn't even look at the stochastics. I jumped in, and the stocks just didn't do anything. And I looked and I said, of course it's not doing anything. I bought it at the top. So now all of these, I had one thing in mind, is to buy them with the stochastics on my side. Worst thing that could happen, it would collapse down underneath, and that would really confirm some selling pressure. And the best thing, you're going to get these little pops. And if I know that rotation back up to the 80 or a touch of the 20 is my exit, I'm going to take it every single time. And if it gives me 2 points, 3 points, 4 points, it doesn't matter to me. 397 to 4,000. Here, nice bull, this was what we call a nice bull flag. And a bull flag setup is another script that we run. This is not a 2020 bull flag, but this is just a good bull flag when a trend is starting and you get a pullback to the 20 period moving average and a fast rotation back down to the 20, hence the name 2020. A move to the 20 period moving average, a stochastic rotation to the 20 period moving average, and a 60 period either embedded or moving up higher, usually in an upward trend above 40, 30, 40, even 50, 60. Once it gets up into those levels, that trend is intact and usually have more and more upside. So that was a good bullish flag, and we took that on the way up and took profits. And overall, that's what we did. 2 good setups all day. Here was another one. This was actually pretty fast. It was like 3/4 of a point. And I think that's where I stopped. We took a lunch and then came back in here. And the market actually had a nice rally at the end of the day. And again, I didn't want to test anything here. I said we have a good day. We're not going to take anything more. So I didn't really take any more trades. Futures are up 15 right now. But that Tradeometer played a big part of everything. So the other part of the puzzle is what we call the Rockbot. And the Rockbot comes on the Rockbot channel, and that also comes with your all your memberships. And this is the Ninja script that I developed over the last 10 years that are able to identify the divergences in the market, the bull flags in the market, the quad rotations in the market, and even take the trades for you. But right now what they do on the Rockbot, they do take the trades for you, but they take them just on the chart, and I take them on my own chart when I do take them, because not every trade is equal. And even though there's setups, I want to confirm that. So I wait for the signal, or I get in and I said watch for a signal, we get a confirmation, and then that's how that works. But a lot of the signals that I take are also what the Rockbot is taking too. Now we have to go back here into today. And you see these blue lines? This is a new script that I just put out here. This is the quad rotation lines. And these are a signal what we're looking at when we have the multiple indicators lining up. And I went over that in a whole new video recently, just before. So this is constantly running, and you can see this is from this morning. Took the same trade here. We had a quad rotation and a divergence long, and I took that off. I took that. Took the next one here, that little pullback divergence. That ran up. Took that off. Then we got another one. Same thing. Just took these that ran up here, followed it, followed it, followed it. There was actually a short divergence up here. You might not even see that. I also have a short script running. That was you can't even see it. It's on the top here. All right, you can see it says 1 minute divergence short. I took that short right on the top here, and it just nailed it. It was a perfect setup there. Let me see if I could go back out here, put this in the right way. It is. And then it came down and took first profit, second profit and stuff. So we got the longs and shorts, and then you have the quad rotations. And the quad rotations are just going to be marking off that. The blue line is going to pretty much mark off what we're looking at. The next version of the quad rotation will give you the option to take that trade. And more information on that. If you're not familiar with this script and other things like this, you can just go to Day Trading Radio. You'll see a link for the Rockbot and the Rockbot and the Tradeometer on the site. All right. So if you go to Day Trading Radio, you see we have a great little beginner trader program here. It's 3 months access. You get all the tools and stuff. This is a fantastic deal. But if you want to get the scripts to run, the only way to do that is become a lifetime member here at Day Trading Radio, which is well worth it because you get so many. You get the School of Stock, the educational forums, the whole package, everything included for life. The Rockbot, the Tradeometer, the scripts, the School of Stock, my Trader's Playbook, high probability setups, and so much more. But I just wanted to show you there's a link here. You go to Futures Pack, and it talks about a lot about the Rockbot and the Tradeometer and how these work and everything about them and the strategies they run and what the Tradeometer is about and what all the pricing is and everything. So check that out. I hope, especially if you're a futures trader and you want to trade with us, we're doing great here. Again, I start trading pretty early in the morning, a little bit before 8 o'clock, 7:45 to 8 o'clock. And you could come and check out everything and give it a try, actually. If you go to dtr.tv/free, it'll bring you right here to no credit card needed. Put in your name, address, choose a login name, day trader, anything you want. Choose a password, confirm the password, and then push continue. You'll get an email back confirming your thing with a link and instructions on how to use the site and the chat rooms and everything like that. So there it is for you. Have a good one. If you're in the room, say hi. And if you have any questions, you could get back to me on this video. Or, don't forget, I should say subscribe. I should have said that way in the beginning, right? Subscribe and do whatever you do. I'm not that type. I'm a trader. I'm not really a YouTuber. But we have something really good here. So hope to see you in the room. And if you like this video, like it and subscribe it. There you go. Take care, everyone. DayTraderRockStar signing off. I'll see you in the markets tomorrow.